expected value at point A is equal to 560,000 into 90% is the probability. Let me paste the image once again clearly. It's coming like that only. So 560,000 into 90%, then plus 240,000 into 10%. So the expected profit at point A is 528,000. Next, we'll start with the next topic, chapter 10, budgeting. See, budgeting is a topic which you have already done in MA. I don't know how much of it you remember, but it is expected that you remember it thoroughly. If you have not um, paid attention, you've not concentrated well. If time permits, you please go through the content once again, because see, not many exercises are given in the examination kit from budgeting. Yes, there are questions, but not as much as it should be, because the topic was already learned by the students in MA. There are few questions which are there in examination kit. If time permits, at the end we will look into those things. But the theoretical concepts, whatever are covered here under PM, let's finish it first, and then we'll go to the next topic also. We'll take it up that also at the end, because today, tomorrow, and day after tomorrow, only 3 days we have these classes. If time permits, we'll revisit again and then take up any numerical question. What is budgeting? The question about what is budgeting? Budgeting is the process of preparing budgets. But what is a budget? Budget is a financial plan which includes all the incomes, expenses, assets, and liabilities. So those things are included um, in budget. It's a plan, but in terms of financial aspects, financial plan, the process of preparing these plans is called as budgeting. So we are going to look into under budgeting, what is the purpose of preparing budgets, what are the various approaches which are available, what is the performance measurement aspect of budgeting, and what basically is looked into, how is the performance measured in case of budgeting. Then the behavioral aspects which are included. This is an important aspect which we have to concentrate. Then what is the meaning of budgetary control? So what are the purposes of budgets? The budget is a financial plan. Plans are prepared for the future period of time, even before the period begins. So prior to a given period of time, budgets are prepared. What is the purpose? The purpose of it is to see that the plan is appropriately implemented. So normally I give this example of in case of budgeting, I give the example. So that example um, explains whole lot of content there. You must have used this Google Maps app. Google Maps is a app which is available when we are traveling to a new place, unknown routes and all. In that case, if the place is typed in the Google Map, in that case, um, it sets the direction, it shows the direction. You can be set out to reach to that particular direction. Halfway through, if you want to find out whether you are on the right track or not, then in that case, um, you can verify into the app, and the app suggests that you are on the right track or not. Let's say if you have taken a wrong route, in that case, that also will be suggested by the app that you are on the wrong route, and what is the route which you have to take so that you can get back onto the right track. Okay, you must have experienced this thing, isn't it? So you can connect that, you can relate this particular example to the process of budgeting, budgets. What happens when there is a plan? See, venturing into the future, not knowing what the future holds, when you take up a plan, that has to be implemented. Okay, that has to be applied, implemented in future period. When the period begins, the plan will be implemented. But whether or not you are going according to the plan in the same direction, in the right route, if you are going or not, you need to verify from time to time. So the verification would be what is the actions which is implemented as against what is the plan. So there is a comparison made between what is the plan versus what is the actual implementation. If there is a variation on comparison of what is the budget with the actual, if there is a variation, then measures are taken to correct the deviations. Variations are corrected so that they can achieve the objective of the organization easily. So that's the example. What is we can take it here. The purpose of budgets is it helps in forecasting the future. Forecasting the future, what does it mean by? The future is unknown, future is uncertain, future is not known. But then what would happen in the future has to be understood. So first step is it is forecasted. Of course, there are many statistical tools and methods which are available wherein the forecast can be taken up. So forecasting the future based on the forecasted data, the plans are prepared. So how much would be the demand for the future? How many units would be sold? If that is forecasted, based on the forecasting, planning will be taken up. So the planning about if 10,000 units have to be produced, how much of material, how much of labor, other resources have to be acquired can be known. After that is known, then the implementation starts. When the implementation starts, there is a comparison between what is the actual versus what is the budget. So there is a comparison made. When the comparison, actual versus budget, then if they suppose there is a deviation, then measures can be taken to um, measures can be taken to correct the deviations. So there is a control mechanism working, because the comparison between what is the actual and the budget talks about there is a deviation. If there is a deviation, control measures can be taken. The way app suggests that there is a wrong route you have taken and then come back onto the right track using this lane. So some way corrective measures can be taken up. So the when once the plan is in place, the plan is communicated to all those who have to implement. So once everybody understands what's the plan, they all work in that particular direction. So they work everybody has the same goal to be achieved. That is the goal of the organization. Organization objectives have to be achieved. So everybody is working towards achievement of the organization goals. So um, they work with coordination because all of them understand the plan in the same sense. So there is coordination present. Okay, the evaluation part of it is about the comparison. The control should have been here somewhere after evaluation. So the evaluation is comparison of what is the budget, what is the actual with the budget. Then, if there are deviations, control measures are taken. Then, when the performance is measured, that acts as a motivating factor to many because based on their performance, they can also be appraised. So, therefore, it acts as a motivation. Then, to take the decisions for preparation of plans and all, authority is given, authorization, authority is given to managers at various levels. The responsibilities are delegated based on which they take decisions. And after that, of course, they are also held responsible on evaluation if there are any deviations, if the plan is not appropriately implemented, then they would also be held responsible. So this is the purpose of budget. That is, a plan in the first place is prepared, and then when it is implemented, if there are any deviations, measures are taken to control the deviations. The plan is communicated to everyone, then it acts as a source of coordination. The performance is evaluated. It can act as a motivating factor. The authority is also delegated. The authority is given to managers at various levels, and responsibilities are they are delegated to others in the organization. The next topic here is budgets and performance management. Budgets and performance management. Under that, there is a concept. See, we have learned one point here in the previous slide. What are the purposes of budgeting? One point talks about authorization and delegation. What is authorization and delegation? So, managers at different levels are given the authority to take decisions. So, in this concept, we have another topic called as responsibility accounting. What is responsibility accounting? See, the organization, when it is decentralized, it is divided into many subunits. When it is divided into subunits, it is for ease of working. So many strategic business units are there. Each of them have a manager. So the manager is given some authority to take responsible take decisions. When he takes decisions, he will also be held responsible for the decisions which he takes. So responsibility accounting, it says that divides the organization into budget centers, each of which has a manager who is responsible for its performance. So with the authority given to him, he takes decisions, and when the decisions are implemented, then the actual implementation and the budgets are compared, and the performance is evaluated. That is Now, these aspects, when they are accounted in the books of accounts, that becomes responsibility accounting. So, responsibility accounting accounts for the planned and actual events. So, whatever are the plans for these units, what we call it as units or divisions or departments or strategic business units, what we call technically. So, these units, whatever decisions which the manager takes, the plans which he prepared, so they are also accounted in the books of accounts, as well as when the implementation takes place, the actuals are also recorded. So it accounts for both the planned and actual events of the strategic business unit. The budget is the target against which the performance of the budget center or the manager is measured. Then there is a concept called as management by exception. Okay, set up standard costs, prepares budgets and sets targets. It measures actual, the actuals are measured and the actuals are compared to the budgeted. So we also call it as variances. Then when there are variances, reasons are why is there a variance? Why is it not according to what was planned? That when it is focused on that aspect of it, so we investigate reasons for differences and take action. We call this concept as management by exception. Why is there an exception? Why is not according to the plan? So when the focus turns towards the variance, towards the deviation, why it is not according to what is planned? When investigation is taken up, when examination, when the variants are examined, analyzed, and based on that corrective actions are taken. So that is about, there is an exception. So why is there an exception? So looking into the exceptions and measuring the performance accordingly. In your management accounting paper, whichever semester you have learned, you must have learned many types of budgets. So the budgets, operating budgets, financial budgets, starting from sales budget, then we see production budget, material budget, labor budget, overhead budgets. See, all these budgets are prepared to understand what should be the course of action taken up for the future period of time. So the employees are focused on implementing these budgets from time to time. They take up the responsibility of implementing the budgets and take it forward. Now that is all already done in management accounting. So we would not be repeating that here in this particular paper. There are, of course, there are other topics related to the numerical things about. We would be learning about some quantitative analysis. Only the forecasting techniques are there, but otherwise the rest of that is all theoretical conceptual things which we would be learning about. So here there is one topic which is called as behavioral aspects of budgeting. It's very important that um, it's very important that we understand this, because this would be even repeated when so one part of the case at least would be related to the behavioral aspect of budgeting. What is behavioral aspect of budgeting? What is that we have to actually learn? There are certain key issues which are given, and then there are different styles of management in case of budgeting. First one is dysfunctional behavior. Want goal congruence. But what's the concept of goal congruence? So what is goal congruence? See, the organization objective is what has to be achieved. So the very basic purpose of the organization's existence has to be fulfilled, achieved. So the long-term plans, the organization goals and objectives are defined. The long-term plans or the basic purpose is made into short-term plans and all. See, when the responsibility accounting with when the organization is divided into subunits, responsibility centers, what we call it, when they are divided into that, each unit has a manager who's appointed. The manager takes decisions for the unit and they um, implement those plans. So here, their comparison is also there, their performance is also measured. So in this case, what happens is unknowingly or knowingly, each unit starts competing with the other one. As long as it is a healthy competition, it is fine. But then sometimes they perceive that their department, their unit goals are much important and they have to achieve those goals only. So in this process, they may forget that this this kind of behavior would not be helpful in achieving the organization objectives. Each unit is not in isolation, that they are existing for fulfilling their purposes. They are present there to take up the organization work. Organization goals and objectives have to be achieved. So that is their main purpose, that is their main objective. So that has to be achieved. But when they work work with an intention of achieving only their unit, their department objectives, sometimes which do not coincide with or which do not go with the organization objective. When the entire organization, all the units and departments work together achieving the same goal, which is the goal of the organization, that is called as goal congruence. Everybody has the same objective, everybody is working towards the achievement of the same objective. So that's called as goal congruence. So dysfunctional behavior, if when they do not see that, when they do not realize that, when they do not um, take it up and have some other objectives, some other motives behind achieving their own targets, then that is a dysfunctional behavior. But they should be, rather, they should be working towards achievement of the organization objectives with a goal congruence. Goal congruence, everybody working towards the achievement of the same objective. Then, see, there are styles of preparing budget. We see that participative style of budget and authoritative style of budget. There are two different styles of budget. Um, let's see what are they. Um, there are basically two different styles of preparing budget. The first one we can talk about as authoritative style, or the top management decides about the budget. They prepare the budget, they just communicate that to the employees in the organization, and the employees achieve that budget. They implement that and achieve whatever is the target mentioned in the budget. Easy, simple to prepare. But yet, authoritative style of budget has a disadvantage that they do not feel motivated because nobody asked for their feedback. Something was just decided and they were asked to implement that. So that is that is a disadvantage. That creates lack of motivation on part of the employees. They do not feel motivated. On the other hand, we see that there is another type of budget which is called as participative style of budget. So participative style of budget talks about um, allowing the various levels of management to participate in the preparation of budget. So they collect feedback from various levels of management. Employees from various levels of management are asked to contribute their opinion. So these opinions are pulled up, and based on that, the future plan is decided. See, it is quite motivating to the employees because they feel that their opinion matters because they are the ones who actually have to implement it. It's not the top management which would be implementing that. They just plan. So the implementation is from the lower levels of management. So they feel motivated because their opinion matter. The feasibility of implementation is taken into consideration. Okay, but this is a time-taking process. The participatory style of budget is a time-taking process, because everybody has to contribute, and people who are called in for contributing their, so they all of them contribute that, then everybody has to agree upon something. See, there may be multiple opinions about what should be included in the budget, because many people contribute their feedback to that. So in this process, agreeing upon or having a consensus about a particular aspect or a figure or any thing, it is a time taking process. So many rounds of negotiation, discussions, and all take place. So it's a time taking, time consuming process. Okay, a lot of time gets wasted, so it is costly also. Then, but the advantage we see that it is motivating. In this context, in this participative style of budget, we see that there is one major disadvantage which is called as budgetary slack. What is slack? See, the purposes of budget, we have seen that the actual performance is taken and it is compared with what is the planned or the budget or the planned performance. So one aspect of it is that their performance would be evaluated at some point or the other. The performance is, the actual performance is compared with the budget, and then performance is evaluated. So that is one known fact. If that is the case, if the performance is evaluated, now, because participative style of budget, they are contributing their opinion, they're contributing their feedback, they're contributing about what should be the ideal figure. In this process, knowing that later on they would be evaluated, they would be questioned if implementation is not according to the plan. So while giving the feedback itself, they allow to have loose standards to be included or excess amounts to be included. Let's say for a particular aspect, if the cost of that is let's say 50,000, they can contribute, they can give their opinion as it would cost as if it is 52,000, but technically they understand that it would only cost 50,000. Why do they do so? So if they contribute the feedback as 50,000, then if there is some error on their behalf, even if it slightly increases also, later on in future they will be evaluated as they have not implemented the plan properly. So to have some cushion, to have some benefit, that in future, even if they are evaluated, they would not be, I mean, evaluated, and no negative remarks would be there. So they can end up giving the quotation or the figure for um, that 50,000 transaction as 52,000. So now, even if they are not very cautious, not very careful in terms of controlling the cost also, because that 2,000 is an excess amount, it's a cushion amount wherein even if slight mistakes are happen with them also, um, it is allowed for them to spend until 52,000. So there would be no effort to cut down the cost, but otherwise, knowing that it is only 50,000, every effort from the employee side would be put in to cut down the cost, to ensure that the cost doesn't exceed much. It is within this limit of 50,000. So including of inefficiencies, including of excess cost, including of wastages, and have including loose standards into the budget is budgetary slack. Why? Because they this is a participative style of budget, and evaluation would be there in future about whatever is the figure which they have mentioned, whether or not they have achieved that. So in that case, the slack is a possibility. They can include a slack into the budget. So that is one behavioral aspect, because they do not want to be evaluated very strictly. They include, They include budgetary slack into the budgets. Okay. Then we see management styles given by Hofwood. There are three different management styles when budgets are prepared. Budget constraint, profit conscious, non-accounting. So budget constraint is the employees only focus on whatever is mentioned in the budget. Their vision is restricted only until that period, only for that period, because budget is prepared for a period of time. So their focus is on only that particular period, only for that particular budget when it has to be implemented. They do not see anything beyond that. Okay, so it is kind of a short-sightedness or looking only for that particular period. They do not see what is beyond this budget period. So they want to just implement the budget whatever is decided. Then next, we see that profit conscious. Profit conscious is uh, in the short run, they just want to maximize their profit. How can profit be maximized? Either by selling more number of units or increasing the selling price per unit. But more number of units is not a possibility because of the demand constraint. Increasing the selling price per unit uh, can work out, but only in the short run. In the long run, because of the high selling price, the customers may shift towards their competitors. They can get attracted to the competitors' products available at a cheaper prices. So, if they are more focused on profit conscious, it may work in the short run, but it will not work in the long run. So, that is again an aspect which has to be noted down. So they cannot afford to disturb the demand in the long run. There should not be no negative remark on the organization on account of their fulfilling their objective of maximizing their profit. Maximizing the profit in the long run works out, but in the short run will affect them drastically. But then some of them are only focused to achieve things in the short run. So they just look into the short run only, not realizing what impacts or the negative impacts that would leave on in the long run. So that is one style, profit conscious. Another style of management is they just do not only focus on the financial accounting terms, but they also consider non-accounting parameters like quality, productivity, then flexibility in terms of delivering it to the customers, on-time delivery, customer satisfaction. Okay, these aspects are also taken into consideration, motivating the employees in the organization. So, in the process of implementing the budget, they also ensure that certain other non-accounting parameters are also taken into consideration. Then we see target setting and motivation. When the targets are set, what are targets? The ones which are included into the budget. These targets have to be achieved when that period of time starts. So, what are the expectations versus aspirations? What do they expect? See, every organization has some expected desires and objectives, the profit objective and all. There are certain expectations, but what is the aspiration? How do we define what is an aspiration? Nobody is listening. Okay. See, what is that they expect in the long run? What is that they expect, or what is their expected objective versus what is that which is possible for them to achieve, and what can they aspire to be achieved? So, what is the ideal target? What can be See, the organization which are set up with an objective of maximizing their profit would want to maximize their profit. So in that process, can they have any target? What is feasible for them has to be decided as ideal target. So every company which starts cannot start with ambition this time. Every company which starts with an objective of maximizing the profit cannot aspire to be the number one company or make the maximum profit during a particular period. See, that is not feasible. Feasibility also has to be looked into. What are the resources they have? What are their strengths? What are their capabilities? How sound they are in terms of technology? Whether they have any backup if there is some disturbance, do they have spare resources to see that all, when we look into that, talks about the feasibility, whether it is possible for them to achieve whatever they are aspiring to achieve. So the feasibility part of it also has to be looked into. So what is an ideal target? Then targets, once they are decided, they should be communicated in advance to the ones who are implementing them. Dependent on controllable factors. Okay. See, there are certain factors which are not in. See, when the budgets are prepared, see, purposes of budget also we have looked into that. There is an evaluation. The evaluation talks about comparison of the actual with the budget. So evaluation is a part of the budget cycle. So everybody would be evaluated, those who are involved in the implementation of the budget. So when they are implementing the budget, when the evaluation is taking place, at that time there are certain factors which are not controllable, certain factors which are in the control of the that particular unit. Manager cannot take decisions about everything. There are certain factors which are under his control, there are certain factors which are absolutely not under his control. Let's say suppose to a unit or a department, some fixed costs are allocated. Let's say that organization charges, establishment charges, or top management salaries. See, each department has to bear those charges. So one portion of that charge is charged to department A. Can the manager say no to those charges? No, he cannot. They have to bear those charges. There are certain costs which are uncontrollable, which have to be borne by each department or division. So when the performance is evaluated, the performance evaluation should be based on controllable factors but not on uncontrollable factors. So that is very important. Then it should be based on quantifiable factors which can be measured, quantifiable factors linked to appropriate rewards. Okay. When the performance is measured, that should be connected to rewards then again should be very very specific. They cannot say if an employee is efficient, he will be entitled to a commission of 10%. See, what is efficiency? Quantify that. Efficiency can be maybe like if the employee achieves a sales target of 2000 units per month or 5000 units per month, so that's quantifiable target. So it says that based on quantifiable factors, their reward should be based on linked to appropriate rewards. It should chosen to ensure goal congruence. So when the targets are set, they should be aligned to the organization goals and objectives. They cannot have in isolation their set of goals and objectives. So in this way, when objectives are decided, all of them understand the organization objectives because their objectives are aligned to the organization objectives. So goal congruence becomes possible. What are the advantages of participative style of budget? Just now I have explained to you. Increased motivation, should contain better information, then increases managers understanding and commitment, better communication, senior managers can concentrate on strategy. So because the plan is already prepared and then communicated, so the because the employees are also present there in the discussions about what should be finalized. So everybody understands that what is the budget. So the managers now need not be involved in communicating and then explaining them about what are the targets, but rather they can concentrate on preparing the long-term objective, the strategy, the plans for the organization. Disadvantages are loss of control. Everybody who has their say, their voice is, they want their opinion to be included. So in that case, agreeing upon a certain thing, consensus becomes a difficult target. So there would be loss of control. Okay, managers, if they are inexperienced, that reflects in the way the budget is prepared. So inexperienced managers then budgets may not be in line with the objectives of the organization. Budget preparation becomes slower and disputes can arise because a lot of time is spent in discussion and then agreeing upon a particular thing. It becomes a target. Then budget is slack, including loose standards or excess cost into the budget is slack. Certain environments may preclude participation. Now, already learned about the concept of risk and uncertainty, incorporating risk and uncertainty into budgets. There are various aspects about risk and uncertainty. Those things are included into budget. The first one is flexible budgeting. The budget, when it is prepared, it is prepared based on some forecast. So the next period, the anticipated activity which would take place is some figure would be decided. Let's say that 50,000 units would be sold. If that is an anticipated, that is a forecast. So the planning will be taken up for producing and selling 50,000 units. So that is how it goes on. But whatever is anticipated for the future, not necessary that it would happen exactly as it is. There is a possibility that instead of selling 50,000, demand can be more than that. They may end up selling 60,000 units. So, but if the plan is prepared at 50,000, 50,000 and 60,000 are not comparable. Cost at 60,000 will definitely be higher than cost at 50,000. So that doesn't serve the purpose when there is a fixed budget which is prepared, and if the actual activity is not on par with the budgeted figures, comparison doesn't happen. Comparison is not possible. See, you are still in the first year. Your performance, if someone says that it is compared with second year students' performance, it is not why it is not right. Okay, it's not fair that performance of first year students is compared with the performance of second year students because they are on different levels. So activity level of 50,000, activity level of 60,000 are not comparable. When they are not comparable, the whole purpose of preparing a budget becomes waste. Okay, so therefore, to accommodate those things, all possible uh, activities which can happen in the future, anticipate all the possible things. Maybe they are anticipating that demand could be 45 or demand could be 50, 55, 60, whatever multiple activity levels which they are anticipating to happen in the future. All these activity levels are included into the budget. So we have data, we would have figures for each activity level. So in future, when the activity level takes place, the activity level according to the appropriate budget, these two things are compared, and the rest of it takes place. That is the deviations, if there are any deviations are noted down, measures are taken to control the deviations. So flexible budget is a budget wherein multiple activity levels for which the plans are prepared and included into the budget. That's a flexible budget. So when flexible budgeting is taken up, the right activity level in the future will be compared with the appropriate level in the flexible budget, and the rest of it follows. That is comparison, deviations, examining the deviations, taking corrective measures, etc. Okay. Next one is, what is rolling budget? So when a budget is prepared, let's say budget is prepared for the next 1 year. Some of the businesses, it is not possible to anticipate what would happen for the next 1 year. It may not be possible because maybe the business is seasonal. So season after season, how much would be the demand? Only for the one season at a time they can anticipate. Or certain businesses wherein there are drastic changes, but there are drastic changes which take place. Technology changes very frequently. If that is the situation, in such situations, anticipating for a longer period of time or a considerable period of time uh, is not very helpful because many changes keep taking place. So in such situation, instead of preparing a budget for one full year, this period or one period, whatever is that period, that is broken down into smaller periods. If we say that for one period, 1 year, 1 year, instead of having one budget for one full year, this budget of 1 year can be broken down into 4 quarters. So we have quarter one, quarter two, quarter three, quarter four. So the budget will have what will happen in quarter one, then quarter two, then three, and then four. So the activities which would take place in each of these quarters are each of these quarters are mentioned specifically. Then when the time passes by, the first period lapses, quarter one ends. So at the end of first quarter, quarter one budget from the budget, rolling budget is dropped. This would be dropped. So at that point of time, they would have only budget for the remaining time periods, that is Q2, Q3, and Q4. At that point of time, when they are dropping one budget, one period budget, another similar period for which they would prepare and add it to the existing budget. So that would be second year quarter one. So at any given point of time, they would have a budget for a defined period of time. For example, if for one quarter they are preparing budgets for January, February, and March. January, February, and March. So in that case, if the first month expires, so the month of January is dropped down from the budget. Another similar period would be April. For April, budget is prepared and it is included. So this way, they would be accommodating the changes continuously. They keep updating their budget. So it's also called as a continuous budget. Okay, rolling budget as the time rolls by or passes by, one period budget is dropped and another similar period for which the budget is prepared and added. Then the third concept is scenario planning. What is scenario planning? Scenario planning is whatever happened in the past, whatever happened in the past is becomes the base for them to prepare the budget. So from the past, they observe what are the factors which have high impact, what are the factors which can repeat in future. So they are noted down. The ones which have high possibility of being repeated, they have high impact. If they happen, there is a very high impact on the business. So those things are noted down. Out of which the ones which are consistent, which can get repeated in future, they are noted down as scenarios. Once they are noted down as scenarios, planning is taken up. If what if this particular situation again repeats in the future, if such a scenario again prevails, in that case what should be the course of action. So the planning is taken up accordingly. That's called a scenario planning. Sensitivity analysis says that, see, if there is a change in a input variable, what impact does it have on the output when it is tested? We call that as sensitivity analysis. One variable at a time. What if material is used less? What impact does it have? Or what if only this amount of capital is invested, or like that, one variable at a time, multiple changes are made, one variable at a time changes made, like that many times it's repeated, and they try to observe what is the impact it has on the output. So the best desired output is understood, and that will be implemented in future. What if analysis is, what if this happens, what is the impact? What if this happens, what's the impact? In that fashion, the analysis is taken up, questioning what if this happens, what if that happens. So that's trying to understand what would be the outcomes of if this changes, if that changes, or etc. So on. See, rolling budget and periodic budget are in contrast. Periodic budget is one for one period, a budget is prepared, but rolling budget updates their budget on a continuous basis. See, each period of time, the budget is divided into shorter periods, and the budgets are prepared. Each one short period, which when it expires, that is dropped another similar period for which the budget is prepared and added. That's rolling or continuous budget. Otherwise, it's called as periodic budget. So a budget kept continuously up to date by adding another accounting period when the earliest period has expired. So it is not necessary that it has to be always for 12 months or 1 year. It can be in any format that the budget is prepared. It is suitable if accurate forecast cannot be made, or if need tight control. Other approaches to budgeting also are there, which is incremental, zero based, activity based. Incremental and zero based go as opposites. The traditional method is the normal style of preparing budget is incremental budget. That is, the past budget is taken as the base, and to this base, whatever is anticipated to happen, whatever changes are anticipated to happen in future, those changes are noted down, and an incremental budget. So, incremental changes are made to the past budget, and an incremental budget is prepared. Advantages: it is simple, easy to prepare because already there is a base. Base is the past period. The past period base is taken, and the budget is prepared. Easy because they don't have to reframe it again, everything from the beginning. Easy to prepare, less time consuming. But disadvantage is also there in case of incremental budgeting. Whatever inefficiencies were included in the past period, they get they continue to happen in the future as well. The inefficiencies can be repeated in the future. So, in contrast to incremental budgeting, we have zero-based budgeting. What is zero-based budgeting? There is no base selected, that is, the past budgets are not taken as the base. Rather, everything is decided as fresh. Everything is thoroughly researched, and the figures are included in the budget. And it also has to be justified as to why these figures are the appropriate. Time consuming, lot of time has to be spent because this they're not depending on any past budget as the base. They're starting everything afresh. In this process, lot of time has to be spent. It is a costly thing. This there is continuous involvement in this. They have to thoroughly research, so it is time taking and costly thing. But the advantage is no inefficiencies can be included into the budget. Usually, in case of government organization, we see that this type of budgets are prepared. Whenever the government changes, they do not continue with what the previous government has prepared. They start again once everything is started again afresh. Preparing a budget from zero base, justifying all expenditure, identifying all possible services, and then cost each service, rank the decision packages, in identify the level of funding that will be allocated to the department, use up the funds in order of ranking until exhausted. So everything is identified and included. They are uh, research is taken up as to what is the profitable course of action. They rank the decisions, they allocate the resources, okay, and then utilize them so that the profits can be maximized. Activity based budgeting, we've learned the concept of activity based costing principles. In case of preparing, in case of accounting for overhead costs, when the overhead costs have to be accounted for, they have to be charged to the products and services, use of activity based costing principles are taken up. What do they suggest? They suggest that the overheads can be appropriately allocated, but um, of course, there are okay. So that is the case. That is in case of accounting for the transactions. So these principles can also be used in case of preparing the budgets. See, estimating the direct cost is not a problem because they vary proportionately. Estimating fixed cost is also not an issue because they would remain the same. But estimating the semi-variable overhead cost, or the overhead cost rather, estimating the overhead cost is a problem. So when the overheads have to be estimated, which are not identified with the activity or the product or service, then how do they forecast these things? Using the activity-based costing principles. How many units or what is the usage of the activities is first noted down, and then what is the consumption, which is what is the usage of that particular activity, that is also noted down. Identify total amount of overheads which would be required, and out of the total amounts how much should be charged to a particular product. So using the activity based costing principles, then overheads can be estimated for the future. So use of activity based budgeting. So which budget is most suitable? We have looked into fixed, flexible, periodic, rolling, incremental, zero-based, activity-based. Many types of budgetary systems or budgets are available. Which one is more suitable is depending from organization to organization, the nature of activity which is carried on. Uh, the method can be chosen. The type of budgeting can be chosen. The type of organization, type of industry, type of product and product range, culture of the organization. Changing a budgetary system, what are the factors to consider? Changing a budgetary system, moving from one system to another system, the factors to be considered are how much time does it take for them to move from one system to another system, whether it is time consuming. Are suitably trained staff available to implement the change successfully? What is the time the management can allot when this change happens? What are the training needs which are required so that the employees can get accommodated or accustomed to the new change, new method change? What is the cost of incurring that? What is the benefit they can derive out of changing the budgetary system? Okay, that is cost versus benefit analysis of the new organization, new system. Then beyond budgeting, we see that beyond budgeting, there should be depending on greater use of rolling budgets. Rolling budgets, instead of looking at a longer period of time, focus on short periods of time. At the end of each of the short period of time, another similar short period of time for which the budgets are anticipated and included. So there should be greater use of rolling budgets, greater use of non-financial targets also. So it's not always the financial aspects, but the non-financial aspects like quality, delivery, flexibility, customization, customer satisfaction, the motivation, empowerment, authorization, delegation. See, all these things also have to be taken into consideration. Then we see innovation is encouraged and rewarded. So whenever there is something they come up with a new thing, that should be encouraged and rewarded. And budgets are set locally. Then budgetary control mechanism or control measures which are taken to ensure that budgets are properly implemented. There are three different things which are feedback control, feed forward controls, and flexible budgets. Feed forward control is even before anything happens, forecasting into the future, looking into what would happen, something like a preventive measure. When that is taken up, we call that as feed forward control. Okay. Feed forward control is defined as the forecasting of differences between actual and planned outcomes and the implementation of actions before the events to avoid such differences. So anticipating what can happen, forecasting what can happen, and then be prepared for that, and then kind of taking a preventive measure. Feedback controls are once it already happens, based on the observation of what actually happened, if certain control measures are taken, we call that as feedback controls. Otherwise, looking into the future, forecasting what can happen, and even before anything worse happens, if they can be prepared with that, that's called as feed forward controls. Flexible budgets, anticipating multiple things to happen, and then preparing budgets for multiple levels of activity, and then being prepared is flexible budgets. The quantitative analysis part of it is the forecasting techniques which are used. How are the figures which are identified? How are the figures which are estimated included in the budget? So that is based on the methods which are available for us. In our syllabus only two methods are there. There are many methods are there. The first one is based on high-low method. Second one is what is the learning curve. So as we are looking into the numerical question, we will take it up. I think I was on mute. Under the high-low method, the question what we can take it up is question number 162. Please pay attention to this one. The management accountant of a business has identified the following information: activity levels. There are two different activity levels, which is 800 units and 1200 units. The total costs are given. The fixed cost of the business set up by 40% at 900 units. What is the fixed cost at 1100 units? See, there are basically, we can mention that there are three different types of cost based on the behavior. One is a variable cost, which varies proportionately with the output. Another one is a fixed cost, which remains same. Okay. Then there is a semi-variable cost, which is partly fixed and partly variable. Variable cost can be anticipated. Proportionately, that would be changed. Fixed cost also can be estimated because it would remain the same. Semi-variable cost, because it is neither variable nor fixed, it cannot be anticipated properly. So we take the help of a high-low method. So high-low method talks about select from the set of data one high activity level, one low activity level. Of course, in this particular question, we have only one activity level. 1 second, if this has an adjustment, if I can teach you one basic question. um, we'll do one very basic question because there is an adjustment there. Immediately after we finish doing 164, we'll go to 162. Question number 164. This is without an adjustment. The budgeted electricity cost for a business is 30,000 based upon the production of 1,000 units. If the units increase to 1,400, then the budgeted cost would rise to 31,600. Using a high-low approach, what would be the budgeted electricity cost if 2,100 units were to be produced? So, of course, only two levels are given. Let's take the high level first. Then take the low level. So for these high levels, what are the units? What are the costs? See, at high level is 1,400. For 1,400 units, we see that the cost is 31,600. Then for a low level, which is 1,000, the cost is 30,000. Okay. If this is the case, there is a difference in that. That is, see, these are semi-variable costs. So a part of it is fixed, a part of it is variable. That therefore it is not possible to estimate it properly. Fixed cost will remain the same, any activity level it's the same, so no need to worry about it. Variable cost also can be changed proportionately, so that is also easy to estimate. But coming to the semi-variable overhead, how to estimate that? What do we do is we separate the semi-variable component as variable and fixed, and then based on that we estimate it for the future. Here also we see that uh, semi-variable cost is given at two different levels. One is at 1,000 units. When it is 1,000 units, the cost is 30,000. When it moved, when it increased from 1,000 to 1,400, Cost increased from 30,000 to 31,600. Why would it increase? It increases because there is one variable component in that. So any change which happens when the activity level changes, that is on account of variable cost. Okay. So the difference between these two levels, first let's mention that. The difference between these two levels is, how much is the difference? 400. And here it would be 1,600. That's the difference. This is all because of variable cost. So that's the variable component. Okay. So now we see, we can find out what is variable cost per unit is equal to 1000 1600 divided by 400. So that will be equal to 4 per unit. $4 per unit. Once the variable cost per unit is known, we can separate the fixed cost. So how do we separate the fixed cost? Any activity level can be selected. Anything can be selected. So let's say at 1000 units. What's the total cost? Total cost is equal to 30,000. It's already given. From this, less variable cost. How much is variable cost? It's 4 per unit. So 1000 into 4. 4,000. The remaining is fixed cost. So fixed cost is equal to, out of 30,000, if we deduct the this 4,000 amount, that the balance amount is fixed cost. Now I said select any level. Do you think the same thing works at the other level also? Let's check that one out. If it is some other if it is the other activity level, if it is 1000, because fixed cost is a cost which remains same. So this is 31,600, and this would be 1,400 into 4. So 5,600, if we deduct that, that's 26,000. So in any level, we would have it the same fixed cost. So once variable cost is known, fixed cost is known, this can be used for estimating at any other activity level. So estimated cost for 2,100 units. So first we have to estimate what is variable cost. Variable cost is 4 per unit. So 2,100 into 4. So that is equal to, then we also have the fixed cost. Fixed cost is 26,000, Add them up, that becomes the total cost. So total cost at 2,100 units is 34,400. That's how the estimation takes place using the high-low method. So this is how it works out. The reason why I have put it aside the previous question was there is an adjustment included in that. If this concept is clear, we will take it up that one. If this concept is clear, that is question number 164. This is how high-low method works. So let's take it up. 162. Question number 162 says that the management accountant of a business has identified the following information. We have the activity level, the total cost, and then the fixed cost of the business set up by 40% at 900 units. What is the fixed cost at 1,100 units? See, the fixed cost remains same until it reaches the maximum capacity. See, let's say if this is the maximum capacity, until this, the fixed cost remains same. But once the capacity goes beyond that, we see that the fixed cost again increases. But then it again remains same till the next level. Then it increases, then it remains same. So we see that there is a behavior of this fixed cost also in the form of steps. We call that a step fixed cost. It is not that forever it would remain the same. It remains the same until it reaches the maximum capacity. Once the capacity is crossed, then fixed cost also increases. But then again, till the next level, it remains the same. That is what is given in the adjustment. It says that the management accountant of a business has identified these things. That is, one is 800 units activity level, one is 1,200 units activity level. At these two activity levels, two different sets of figures are given. But halfway through, see, between 800 and 1,200, we see that between 800 and 1,200, somewhere at 900 units. So if this is 800 and if this is 1,200, at 900 units level, we see that the fixed cost has increased by 40%. So this is 900 units. We see that there is a change which has happened to fixed cost. Fixed cost has of the business was set up by 40% at 900 units. What is the fixed cost at 1,100 units? So let's take up this high-low method and work it out. So did you get this amount? Variable cost per unit, we got it as 18 per unit. Is that so? Okay. After that, um, see, to find out the fixed cost here, it is not the same that from 800 units till the 1200 units, the fixed cost part of it is the same. See, the fixed cost, whatever is now calculated, it would be after a 40% increase. See, the amount has increased by 40%. So what do we do in this situation? So when we select any particular level, instead of proceeding it further in this particular fashion, wherein we have separated the fixed cost, we can take another route that at uh, select the high level, select the high level at 1200 units. We see total cost is equal to 23,600. But this 23,600 units, okay, sorry, $23,600 is basically made up of 23,600 is equal to the variable cost. Variable cost is 18 into the variable cost is for 1,200 units plus the fixed cost. But fixed cost is already increased by 40%. So 100 plus 40%, 140% fixed cost is there. So fixed cost is 140%, which can be written as 1.4 fixed cost. That is a way in which you can identify what is fixed cost. So just check that 1.4 fixed cost is equal to 23,600 minus how much is 18 2 so 36 3 18 1 so 18 9. Is it 21,600? Fixed cost is equal to, is this the answer? 1,428. No, 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 no. Actually, see, the change is not only because of the variable cost, because 40% increase in that is also there. So, see, because 40%, if the increase is from 800 to 1200, if the cost is increasing, this is not all because of the variable cost. The fixed cost is also increased by 40%. So that 40% has to be reduced. Then only we can include that 40% of. See, after adding 1.4, 1.4 is equal to. Let me just check this. 1.4 is 23,600. How much is 1? But then total, only the fixed component is increased. Sorry, just a minute. I lost the track. Um, the fixed cost of the business set up by 40% of at 900 units. So when it is at 900 units, only the fixed cost is increased. So that fixed portion has to be eliminated. Sorry about the confusion. Let's reframe them. Um, let's reframe the data. See, there is from 800 when the cost has increased to 1200, there are two aspects which have increased. Otherwise, in the previous question, what we have looked into was it was only variable cost which was increasing, but we see that even the fixed cost is also increasing. So when 800 was the amount was the units, it is 16,400. So when this increase happened, this increase was on account of the variable cost, and also because in between 800 and 1200 is 900, there is also a 40% increase in fixed cost. So that is the logic here. See, the variable cost is increasing plus the 40% increase in the fixed cost is also increasing. When the units have increased from 800 to 1200, the cost of 23,600 is on account of proportionate increase in variable cost plus 40% increase in fixed cost. So this has to be framed. Let's frame the equation. How do we do that? Uh, Select each level. First 800 units level. What is the cost? 800 units level. So let's write at 800 units. Let's write the equation. The equation is the total cost is 23,600. 23,600 is equal to, this would be basically about the variable component. So the variable component 800, variable component will put it as V plus the fixed component F. This is equation 1. Then when the number of units have increased to 1,200, we see the total cost. I'm really sorry. I'm really sorry. This is the 800 is 16,400. 16,400. and this has become 23,600 is equal to, the variable cost would be 1,200 variable cost plus, now fixed cost is just not fixed cost, but it is 1.4 because 140% has increased 140%, so it is 1.4. 1.4 F. So we have two equations. So what are we supposed to do? We have to eliminate one unknown variable to find out one. These are two simultaneous equations. Do you see that? So substitute one equation in another one. So 16,400 is equal to 800 V plus fixed cost. 23,600 is equal to 1,200 V plus 1.4. So take equation 1. Equation 1, if you take the value, substitute in equation 2, F value. So here what we can have from this one, we can have it as, which is equal to, we can write it here as F is equal to, take 800 V to the other side, 16,400 minus 800 V. Substitute this in the second equation. So now we have 23,600 is equal to 1,200 V plus 1.4 in bracket 16,400 minus 800 V. Simplify this one. I hope you know how to simplify that. 23,600 is equal to 1,200 V plus what is 1.4 into 16,400? 22,960. That becomes 22,960 minus 1,120. 1,120 B. Now I think it can be simplified. So that becomes 880 B. 23,600 minus 22,960 is equal to 880 B. So V is equal to 80. I'm really sorry. It is only 80, not 880. 8. So we got variable cost as 8 per unit. So once variable cost is at 8 per unit, we can estimate what is the fixed cost. substitute in any equation, find out what is fixed cost. See, if we take at 800 units, we would get what is the original fixed cost. So we would get what is the original fixed cost at 800 units. Total cost is equal to, we have the total cost is 16,400. Then less variable cost. Variable cost would be 800 into 8. This is fixed cost. Fixed cost would be 10,000. Fine. But then fixed cost has increased by 40%. So we can also select this at 1200. 1,200 units. Total cost is 23,600. Variable cost is fixed cost is 14,000. Why is there a difference? Because there is a 40% increase in the fixed cost. So that was the point which was mentioned. So because of the 40% increase in the fixed cost has increased to 14,000. So that is what is the concept. It says that the fixed cost was set up by 40% at 900 units. Now we are asked to anticipate it at 1100 units. So 1100 is after 900 units. So any level which is after 900 units, fixed cost will be 14,000. So I hope you understood. So estimated cost at for 1,100 units. So which one would we take? We would take variable cost will be 900 units into 8. 8 is the cost per unit. So we select 14,000 because 900, 1,000. I'm really sorry. This is not 900. We are estimating for 1,100. So 1,100 has to be taken. Total cost is 22,800. Okay, they are only asking us what is the fixed cost. They're only asking what is the fixed cost. Fixed cost is 14,000. So anything after 900 units, the activity, the fixed cost amount would be 40% more than what is it initially. So it should be 14,000. If we are to find out estimated cost for 1,100 units, this would be the cost. So this is high-low method. Of course, this is an little advanced adjustment which is included, but the basic working out of the high-low method looks like this, wherein we take the high method, high amount, low amount, find the difference, and then find out what's the variable cost per unit, and then find out what's the estimated cost at any other level. But here also, we see that the change would be on account of the variable cost, but apart from the variable cost, a portion of the fixed cost also has increased after a particular level. So eliminating that portion of that, we can find out what is the initial fixed cost, Then after the change, what is the fixed cost? Both the levels we can find out, and then use it for estimating it in any other activity level. I hope it is clear. Little confusing, but then I hope you have got the point. Okay. See, there is another method, but there's no time here. Another quantitative analysis method we have. That's called as the learning curve. Um, After high-low method, we have learning curve analysis. I just give you the numerical. We can take it up tomorrow. See, it says that as the see, practice makes a man perfect. That is a saying in English that if the same work is done again and again, every time, eventually, when the same piece of work is done, it would be done better. Practice makes a man perfect. The same concept is used here also. When the same piece of work is done again and again by the labor, that would be done better. That better thing or that efficiency is measured in terms of the time taken. So every time when the same piece of work is repeated, the amount of time which is taken reduces by some percentage. So when the time taken reduces, the cost of labor also reduces. So we can use the this learning curve method in terms of estimating what is the labor cost and use it in the budgets. So for one of the forecasting techniques is about the learning curve analysis. Learning curve analysis says that as cumulative output doubles, the cumulative average time per unit falls. The time taken reduces to a particular percentage. Okay, we call it as learning rate, and therefore it is helpful in estimating what is the labor cost for the future. So that's the concept of learning curve. There are numericals which have to be done based on this particular equation. Simple questions only, very simple questions are there. So we'll take it up in tomorrow's class and then proceed further. Okay, tomorrow we will do variance analysis also. After variance analysis, in detail, we will have to study about the performance and measurements. That's it. That's the syllabus. Okay, we have another 2 days, tomorrow and day after tomorrow, isn't it? It is Wednesday. Okay then. Good day.
Thank you, ma'am.
Thank you, ma'am.